Hi, I'm Rick Hall of ACC Brokers in the BioInsure program. I'm going to tell you today about the first kind of insurance that the typical new company encounters. And that is when they first take a laboratory at a facility like this. This is the University of Florida Biotechnology Center. Lab will be leased out by the Technology Center to a professor starting a company. And the first thing they see in their lease was they shall require commercial general liability insurance, which is also known as CGL. What does that cover? Well, first it covers bodily injury liability if you injure a person, property damage liability if you cause damage to somebody's property. Also, there's personal injury coverage, which is false advertising and libel slander coverage. Well, let me give you an example of how this might work. Say the startup company leases the lab from the university. They provide the insurance requested. So the first thing they do is they want to install a piece of equipment. It could be anything. Let's say it's a coffee maker. The coffee contractor comes in, installs a coffee maker, connects the water supply. They go home for the weekend. The whole lab floods, including the labs next door. They come back on Monday, there's property damage everywhere. Well, who's going to pay for that? Well, because of the lease and the insurance set up by the university, the lab would be responsible and their insurance would pay. Now the question is, in risk management, what should have the laboratory, the startup company, have required of the coffee contractor? Yes, the coffee contractor should have had insurance. They should require them to give them a certificate of insurance, and the contractor installing the coffee pot maker would have paid.